The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I've posted the first three charts that we usually look at every morning, the DAX and the FTSE. Especially take a look at the FTSE, folks, on that weekly chart. It verifies that we are in a downtrend. We're right at the 61% retracement, and it matches up very nicely with the three drive to a top pattern on the 60-minute also. So those are some that you might want to keep in mind looking at this. Now, one of the things I used to do many years ago was do a trade of the year, and for some unknown reason yesterday I got a little flutter in my baseball cap, the one with the feather in it, and I said, well, maybe we'll take a look at these again, but I said this is not going to be a trade of the year. This is just a potential trade of the year, because I don't want to be inundated with a million, well, let's say 3 emails from people saying, what do I do next? This is a business where you got to take responsibility and do it yourself. But, that's primarily what I did these for, is to show that these patterns work on a long-term basis. The first 11 years, we had 11 monster trades and got semi-famous, of course. And then right after that time, we had 3 years that we did not lose. We didn't make any money, but the market would go down and back up. I don't remember what they were, but there were 3 years where you had a profit in it, but then the market went back up and took you out at the break-even point. And so those were break-even years. But we have a couple of ones this year that I sent out last night, in fact, quite early, as a matter of fact, before the markets opened, because of the fact that they looked so incredibly tempting. And the first one we're going to take a look at today here is the NASDAQ. If you belong to any of the services that we have, I sent this out in the video, and you'll be able to see it. But what we were watching here was the fact that, we've had the number we're looking at was 12,955. The high last night, folks, in the NASDAQ was 12,957. We dropped a little bit from that level, but that's it. Now, if we close above there, then that means that this trade of the year would be a loser, and it just doesn't work. But that's what it's showing today. I'm only giving you these numbers for your edification. Now, I mentioned that if you did this, you have to risk 50 handles, because this is a very wild trade. 50 handles is $1,000 in a contract that's worth a lot of money. It's worth about $250,000. So that's not a lot of money when you're trading a contract that's quite that big. But the other one that's really interesting that I think that is quite important, and we could all trade this one without too much trouble, and this might have some really, really good moves to the downside, and that is the heating oil, followed closely by the crude oil. I'll do the heating oil first, but last night we popped up to the exact 61% retracement at 153. The high was 153.50. We're now trading at 148. So if we get above 153, that would tell us that this probably is not going to work. But that is an absolute perfect 135 pattern, the one that Bill Longstreet and his dad Roy gave to us. So this is a very good one. And if you take a look at the crude oil, let's just give you a little heads up on that one too, because it's doing exactly the same thing, only a tiny bit different. The difference here is that the exact 61% retracement on crude oil on this long-term weekly chart going back to September of 2019 missed the exact 61% retracement by 40 cents and then broke $1.50. So this is telling us that there's something to pay attention here. So let's keep a little close eye on that if you can. And that would be something that I would be watching very, very closely. So that doesn't mean a whole lot. Now, someone was kind enough. In fact, there are about 4 people that sent this out to me last night. This is a sequence of numbers that is on the internet quite a bit about the stock market. Let me get this up here. Basically, this is the from 2008. It shows you 13 years is 2021. The 2000, which was the dot-com bubble, 2021. The first one, of course, was the mortgage bubble. 1987 was the crash of 1987, the 34 years, 2021. 1966 is when the market first came out of the 1,000 level. That's 55 years. And 1932, which was the absolute bottom back in July the 8th of that year, 89 years, takes us to 2021. There's a big problem here, folks, and I hope you realize it. You realize that 2021 has 255 trading days. We're only in trading day 1. So there are 355 days if, in fact, it's going to make a high in 2021. We don't know that. So that's what's difficult. It's very good to look at this from an educational standpoint and maybe start to look for a top. But frankly, it doesn't do much good other than the fact that it's very interesting that those Fib numbers happen to hit, at those exact numbers. And remember, this sample size is very, very small. Five things is not very much to look at. So I would be very, very skeptical of this, other than from an educational standpoint. Now, also, we have to have the sound of one hand clapping in this room today, folks, for Mr. Z, because the man has flat out nailed these markets in the grains like no one has ever done before. And I'll tell you, we should really be very, very thankful for what he has done. He's did an incredible job. And I think it's, very, very important that we remind ourselves that we have somebody like him in the den, giving us a pretty good, idea of what's going on. Now, I had playing the devil's advocate here, and those of you that subscribe to the service, you'll notice here that we have had a really nice move here. We had a double ABCD pattern up here at that 168 level, 1.618. We had ABCD, everything set up on Friday, so we put that short on, and we had our stop in last night, very close. It ended up $300 stop was hit right away, and the market had kept going up another $800 or $900 because there's a big weather market going on in Argentina and also in Brazil, and I guess that is what's causing this big move, because we had a 35-cent move in beans, another 6 or 7 cents in corn, and so it's telling you that these markets are going to be going higher. And remember here, this is right in the midst of the harvest, so boy, this is telling you this market is it's really getting ready to rock and roll, because we are in a weather market now, so it has to be treated, very, very carefully on either side, long or short. So we got Mr. Z on the line. Mr. Z, how's it be? And congratulations, my friend.
Just working the topics day by day. That's all we can do.
Yeah. Well, you're with the Federal Reserve making a deposit today, my friend?
Going digital, baby. Going digital.
Okay, what can I do for you, buddy?
I would like your help, please, Larry. Starting today, going forward, I'd like to ask you to address this each and every week. We don't have to look at it in any detail today, but the new crop grain contracts.
Z, hold on, my friend. We've got to pay a few bills, and we'll be right back with Mr. Z from Philly.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Talking with John from Philadelphia, Mr. Z, about the new contracts, the new crop contracts that are being dreamed about right now, correct?
Yeah, you know what? I don't like. With all due respect, Larry, I don't like that word "dream." Here's the idea: the new crop contracts would be November 2021 beans, December corn, would be July Kansas City and Chicago wheat, would be the September Minneapolis wheat, and the December cotton. Buyers and growers are actively using these, setting up a year in advance. And this happens, just annually. It's a matter of course of doing business. Speculators generally are less involved in those, and as a result, you see that the daily and weekly volumes in those contracts that far out, the new crop contracts, the volumes are low. Compared to the nearbys. That is true. But what I've learned from, 35 years in these markets, that positioning 9 to 12 months ahead of time is the thing to do if you can find low-risk setups, either shorts at very high prices or buys at very low prices. And just for the record, I'm long the July Kansas City wheat back from September, and I'm long the Dees corn and November beans from that correction that occurred late October. And, of course, back in July, August, September, when I was buying all of these with the nearby contracts, I was doing so only because they were cheap. The patterns seemed to show basing. The risk of buys you could define as very low risk, and the opportunity for profit if a rally occurred would be quite large. And so, I was trading those from the long side back last summer, not because I had any clairvoyance, merely because of the patterns and the risk reward, all those tools that you've taught me and others so well. But going into the next months, as we go through the the growing season and the harvest season down in South America, and then the planting season in the U.S. and, of course, Europe and Russia. We're dealing with a situation where we've had all sorts of weather snafus. First, the flooding in China last summer that we remember the Three Gorges Dam being on the verge of breaking because of excessive rainfall and flooding. That was followed by a drought situation that just flashed up in August into September in the northern plains into Iowa. That was followed by very dry fall in the Black Sea region, be it the Ukraine and Russia. And then, mysteriously, a La Nina equatorial Pacific warming trend took place, which had the typical effect of steering weather patterns that led to drying down in Argentina and southern Brazil. So for the first time, literally back since 2010, 11, 12, the planet has undergone unusual, a far different than average weather with all sorts of adverse conditions for crop growing. And all these things have rallied. And my goal is to hang on to those new crop contracts in through the planting season. And if things turn really adverse here in the summer, have a position which has very low cost bases and potentially very high price if, weather is very adverse come growing season here. So that's a big backgrounder. I apologize for being so lengthy, but I'd like your help, please. If you would just go through the weekly and daily charts in all those new crop contracts and periodically just share with us on Tiger TV what you're seeing in the patterns, I think that would be very helpful setup going into planting and growing season.
John, that is a really good suggestion, and I will do that. I have a tendency to, because I do short-term trading, and stick to where the real action is in the open interest. But you've got a great point there, that because of the political situation as far as supply and demand that we're having now in the world for grains, it's really important that we start to look at, because these dudes are going to be planning intentions, are going to be thinking about what they're going to be doing, come spring, and we're not that far away. We're only just 10, 12 weeks away from spring planting. So I will be doing that. I'll be adding the new crop beans, corn, and wheat, and I'll put those in the letter. And then also, if you'll give me a little jingle every once in a while to do a review, because sometimes I forget, because most of the focus here is on the indices, gold, oil, and a few other things. So if you add treasury bonds, and if you'll let me know, I will definitely put a little segment here in the morning to let the folks know that that's one thing that we're watching, because these patterns will be totally different than the weather market patterns. There's no question about that. So, yeah, it's a great idea,
yes,
and I will do it.
Just those, just to reiterate the idea, the new crop contracts, take those November beans, for example. A nice rally has occurred, clearly lagging the old crop contracts. And that all makes sense. If however, the planting weather come April, May, June, and the growing weather May, June, July, August, if those conditions in the U.S. Turn adverse, given the shrinking inventories that are now unfolding globally, those new crop contracts could just go into very dynamic price movement phases, up and down. And being involved with those early, or if not involved, merely doing the chart work, leads you to be well prepared if, in fact, those big moves start to unfold, being prepared, therefore, to get involved with shorter-term trading with a good feel, quote-unquote, trader's feel for how those particular contracts are behaving.
Okay, that's what we'll be doing then. I certainly appreciate it. And by golly, everybody in the den is thanking you for what you've done for us. And not only that, but in the copper too. My gosh, you had a flagpole, trade in copper, and I think those are great. We really appreciate it. So every information you give us, we certainly enjoy it, my friend. And may God bless. And I hope you had a wonderful holiday and a wonderful new year. Very important that we have that. That's for sure.
We'll look forward to working with you all this coming new year, the days, weeks, and months ahead.
Okay, buddy. Thank you for calling in.
Thanks.
Appreciate it. You bet.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted some comments by one of the smart guys in the internet, David Cass, I guess is his name. But what he's talking about is, people say things about markets and have opinions just like everybody else. And I have this book on my desk that I've talked about many times called The Experts Speak. It's about 500 pages, and every single one of those pages is about someone that said something that didn't, actually happen. One of my all-time favorites was Wendell Willkie. He was the vice presidential candidate in 1941, was at a breakfast meeting at the White House on December the 7th. 1941, and it was a breakfast meeting, and you know what time it was over in Hawaii? Very early in the morning. And guess what happened? He said there was no chance that we would ever go to war with Japan in 30 days, 30 months, or 30 years. And it was about 30 seconds, folks. For timing, that had to be the all-time best. But here's a few of the things that people predicted. The success of Enron, the existence of Saddam Hussein's non-existent weapons of mass destruction, heroic home run production of steroid leaders Barry Bonds and Mark McGuire, financial supermarket concept at Citicorp. Remember that stock split 10-for-1 reverse. The uninterrupted profit growth of Fannie Mae and Freddie Mac. I mean, either one after another. I mean, it's just amazing. And then, of course, the consistency of Bernie Madoff's investment return. So you got to be really careful with everybody and everything, and you have to take the responsibility for it. But remember, just because someone says something on the internet, it certainly doesn't mean that that's going to happen. And that's something that was a lesson that's very hard to understand. That's another one. You're right. David White has just posted the one from the book Only Yesterday by Lewis. And then it says stocks have reached what looks like to be a permanently high plateau. That was Irving Fisher, professor of economics at Yale University, October 17th, 1929. That was 6 weeks after the high, but right before the crash that occurred on October the 30th of that year. And what I want to do now is go hold on here. We got a little call coming in, maybe, Kiss. The world is flat. You're right. That goes back to Pythagoras. Pythagoras knew the earth was round in 666 BC, as well as 663 BC, and yet they didn't realize it until 2000. Well, it was 1,400 years later. Let's take a look here at this market here. Actually 2,000 years later. I want to review the market here, folks, on a long-term basis just to show you what's really happened. It's a really good chart. I want to get this up here to show you where we are. I know I'm not an Elliott wave person, but I look at just normal stuff here. You can see the bottom down there in July of 1930. That's when the Depression, started. Actually, it started in 1930. The bottom was 32 in the stock market. The Depression continued on until World War I started. And you can see there in around 1942, 1943, the market bottomed after beautiful Gartley pattern there, broke out of the trading range at 25, believe it or not, and away it went. As you can see, the annual return here has been 2.8%, 1.5%. You can see the annual return so far has been 15.4%. So these are big moves. You can see the annual return recently has been 13.3. We've broken out of that big trading range here. This means we could still go higher, folks. There's no question about that. The two things that really excited me. I mean, two things that really was interest to me is look at 1987, where it's marked the market crash. That looks like a little blip. Now, this is a log scale, of course, and that's why it looks that way. But remember, the Dow was down 16% that day in one day. And you can imagine 16% on 30,000. Are you kidding me, folks? That means the Dow would be down 4,500 points in one day. This would light up the Christmas trees everywhere, I'm afraid, but it may or may not happen. I don't know. You don't play your life on a what do you call it? A crash anyway. Just try to find the little patterns that work, and you'll be okay. But Mr. Z's idea of looking at the back-end grains is really good. I've got that marked as something to really pay close attention to. Here's one that I realized in last night very, very soon that was getting ready to take off, and that was the gold market. I sent out a post on this that we were most probably going to hit around 1959 to 1966. That's going to be interesting because that's the high that we made way back in October. So far, we've been to 1946, I think, and we're still looking at something. We got double ABCD patterns up there at the 61% retracement, 1966. And every day, folks, that I look at that chart back on November the 23rd when we were covering our short positions from much, much higher prices, and I didn't go long. And I just, boy, I'll tell you, I was waiting for that last little jump down to 1700, and we only got to 1767. 1777, and then since that time we've rallied $150, and those are the ones that you think about every day. Say, oh, why didn't I do it? But that's neither here nor there, and you're going to miss some, folks. There's nothing else. You can't get them all. There's just no way you can absolutely do it. There's just no other way. Peak is saying at 87 was when the Fed balance sheet held sub $1 trillion. Yeah, that's right. I remember that's when the plunge protection team came in. That was on October the 20th. And from that day on, the Fed has been pumping money into this puppy like there's been no tomorrow. And we can see that in the Treasury bond market. The Treasury bond market is in a real yes, Doug Cass was the fellow that sent those little tidbits of information. And but if you want to see a lot of them, and going back in history, going back in the time of Julius Caesar, you can see, just get that book. It's called The Experts Speak. And it's a really great little book. Well, it's not a little book. It's paperback, and it's about 400 and some pages, but it's got all kinds of them in there that are just incredible. The Beatles, they didn't. The RCA didn't want to do the Beatles because they said these groups were on the way out. The Supremes and all the others back in the mid 1964. So how do you do that? Well, anyway, everybody makes those mistakes, boys and girls. You can't do anything other than that. Hey, folks, we got to take a look at something that really, really strange has happened to one of these markets. Let me take a look to show you what's happened here to this brings a question that Melody had last week. And that is about, stop limit orders. Now, look, this is the natural gas contract. You can see the big gap down last week. And that's if you'd had a stop limit order in there, okay, you wouldn't have been filled until Friday when it went back above that limit. And it gapped up again today. This is a very unusual chart, so something crazy is going on in the natural gas. I don't know if they're playing some kind of games for deliveries or what, but if you look at this, the question that someone posed me, is that an island reversal? And if you look at this on the smaller time frame, like the 15-minute, you can see the big gap down on Christmas Eve, and you just draw the line across, and you can see that there's a gap. There's no gap in there that actually fills the gap. Then it comes down, then it gaps up. So that's not an island reversal under any circumstances. So we're going to take a break here. We'll be right back. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're trying to get a new system working here at TFNN to get these trades out as soon as possible. And I had a beautiful setup here. I just posted it in the British pound. Some folks got it and some folks didn't. I wish I did something wrong. I'm trying to figure out what I did do, and we'll get it straightened out. But it actually worked really good for about 100, well, a little more than 100 pips right now. But we'll see if we can get it straightened out. It was my fault, and I will get it running when it's ready to go, so we'll be able to got it. It did go through after all. Good. That's good. Okay, now let's take a look here at a couple of other things that look really interesting here. Now, one of the things that's happening in the overall market that we usually don't look at too often, that is the option buying, the number of options, call and put options. And you can see here there's a record high number of call options being bought now, much more than any other time in recent history. So that could be the fact that everybody's very, very bullish up in here, as they should be. But we're looking at the same time, these patterns are starting to tell us maybe it's not exactly the way the market's really looking at it. So we have to pay relatively close attention. And one of the things that needs to be addressed is the U.S. dollar. And if you look at this, is the exact opposite of what's going on in the U.S. dollar. All of the large specs are heavily short this. So usually when that happens, when they're heavily long or heavily short, there are no more players left and the market has a tendency to reverse. We're seeing the reversal in the British pound today a little bit, and also with the yen breaking down, the dollar breaking against the yen tells us that we're probably getting pretty close to that one coming to fruition as getting ready for reversal. So those are the ones. Regarding the weather market, folks, unless you're really an experienced trader, get the heck out of the way, boys and girls, because those things are very, very volatile. When that rain comes in the middle of the night and you don't have protection, you could really get hurt very, very badly. That's why you have to protect yourself against it. What I follow the patterns, and if a pattern tells me to do it, and I can put the stop in at that point, I'm going to be doing it. And I try to be right about 6 out of 10 times. Lately, it's been a little bit better, but frankly, that could change in a minute. But even then, you got to keep your losses relatively small within reason. I mean, you can't trade for a $50 stop or $100 stop or anything like that. Who knows what's going on. Clemson versus Ohio State. I don't know who won that game, but I would have bet on Ohio State because Clemson was heavily favored. I don't know who won the game because I don't watch football anymore, but I don't know who won. Someone's going to tell me, I guess. Who knows? Did Notre Dame win? I mean, I don't. That's my I better get away from football. That's almost, for me, it's as bad as we'll see. Okay, let's move on here to a couple other things to see what's going on with that. Oh, Ohio State won big. Okay. Hey, wait a minute. The team with the most points at the end of the game wins. David, I'm going to write that one down. So when I make a bet in Vegas, I'll take the team that has the most points. I think they'll cover that. I don't think so, David. I don't think so. But we'll move on to the next one here. We got some other things that I think are important enough to care about. Here's where we are, folks, in what the Fed has been doing. Let's get the Fed balance sheet up here just to show you where this thing could go if the Fed really wants to come in. We're at look at Japan. It's 131% in quantitative easing of GDP. The Eurozone's at 63. We're only at 43. We could boost this up here. We might go to 131 also. Who knows what they're going to do, because they're going to do their best to keep this market up as long as they possibly can. But Mother Nature is out there, boys and girls. There are cycles out there that they're not going to have any control over, and that's when you're going to see some really big things happening. So we got to be prepared at what we're watching here as we look at some of these things. So I think you got to remember history repeats itself over and over again. We posted those fib numbers. Sure, they'll probably be important, but as I mentioned, we have 255 trading days in the year. This is trading day 1. Are you telling me that the day that I happened to pick was the day that the NASDAQ hit 12,955 was going to be today? If that happens, that is what they call a SWAG, or a big coincidence. That's all that is, folks. It's just a pattern that may or may not have happened. I don't know if that's it or not. All I'm saying, that's just a completed pattern. No different than the ones we post here all the time. Sometimes they work, sometimes they work, and they don't. But the probability is that they're going to be on your side of the fence, and that's what it's all about, That's one of the problems when I do this letter here, folks, and this radio show. To do an hour, I mean, you want to plan to give a speech to your friends for an hour? What are you going to say to them? I mean, I have the same problem every day. Do I tell you all about these patterns? Everybody gets tired of looking at that stuff. So you got to mix it in with a few things that may be interesting, maybe not. And speaking of interesting and maybe not, we have a very, very special guest coming on Thursday. Tim Bost of Financial Cycles Weekly will be on. Friday, all the markets will be closed. Europe, Asia, everything, because of the holiday of Mr. Elvis Presley. Birthday is January the 8th. That's the day he was born. So the whole world is closed for that day. And so I think most of the markets in the U.S. and Europe are closed that day, but I'll have to double check. On the 12th of January, we're going to have Norm Winsky as our guest. I'm trying to get Stan Harley come back to give us a little speech this week, and we'll be able to get with him, I believe, later on in the week. And then we're going to have Rich Anderson on, and also Cy Monley a little bit later next week when they get back from their vacations. And so we'll be able to pay attention to those. I wanted to do one other chart, and that was hold on one second. This is what when we're watching these stock markets, folks, remember here that when you're looking at this, you can see that there's only about 20 stocks that you have to worry about. Look at the top 5 stocks and what they've done. I mean, you're talking about Apple, Microsoft, Amazon, Alphabet, Facebook. We're not even throwing in Tesla, up 3,000% or 700% this year. Annualized, that's more than you can get in the bank anymore. They don't give you 700% interest annually in the bank. So, but those 5 stocks have just absolutely exploded to the upside. Could they come down? Well, sure, there's a possibility that they could come down, but maybe not. Don't know. Let's just look at Apple. I watch Apple every day because it's such a big mover in the market. And what I was looking for this morning was to see Apple rallying early. Now, I don't know if that's happened yet or not, because we went down and we hit exact 50% retracement. I don't know where Apple's trading right now or what the high was, but I was expecting the rally to come up a little bit and get a pretty good idea of what's going on here. Okay, so a little chatter about picking a top in the grain markets and the weather market, folks. Just wait till the top is in, and then it's much easier. It really is. It's just easy. Unless you got a perfect pattern like you had in the NASDAQ. If you notice something, look at the NASDAQ and the British pound. The British pound is on a daily chart, and the NASDAQ is on a weekly chart, and it's the same pattern. And, that's all it is. It's just a pattern. It's just an ABCD 3 drive to a top pattern, which is on page 222 in Mr. Gartley's book. Spot on right there. Well, that's on page 249. 222 is the Gartley pattern. All right, we got to take a little break here to pay a few bills, and we'll get back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back as market sold off a little bit, not doing too much. The dollar is still weak. The euro almost hit, well, in fact, it did. It hit 123. The pound is sold off. It's trading at around the 136.15. So just not much going on in the dollar yet. The Treasury bonds are starting to show some type of a bottom coming in here, folks. And if the market is getting ready to sell off a little bit due to the tax implications of the corporate taxes, that means that the 10-year and the 20-year will probably start to rally a little bit. Remember, we've been in a pretty strong bear market here in bonds and notes. Well, let's rephrase that. It's been a minor bear market. It's been down, but not by much. It's been sloping down, quite nicely. It's not a straight down move like some of these things we've seen. But we might get a little bit of a rally. Interest rates might go lower for a short term, but I don't think we're going to see negative interest rates in the future. But that's just my 2 cents worth as far as I think a prediction would be. I don't know. Okay, someone was asked a question about the NASDAQ at 12,955. How did I get to that number, folks? It's right in the newsletter. It's a perfect 3 drive to a top pattern. It's just real simple. It's got an ABCD on the weekly. That's no different than the ABCD on the British pound that we're looking at. And and look at the ABCD that we had in the soybean oil. And that one didn't work. So you had 3. You had 2 that worked, 1 that didn't. That's the way it is. You don't know which ones are going to work and which ones aren't. So it pays you money and it takes your choice. That's basically, what you're looking at here. So those are the few things that we're watching here this week. Remember, we're going to have Rich Anderson on tomorrow to talk to us about the grains. I just got a text from him saying he will be on tomorrow morning because of this weather market. We need to talk to it a little bit. And also we'll look at the deferred contracts tomorrow, the November beans for 2021, also the corn and the wheat. We'll do that. Mr. Z told us that. So live every day in an attitude of gratitude and a Happy New Year.